YouTube, Peter here. Just want to add a little bit to the video that I was doing about don't give up on prepping. I've been reading a lot more today about Asia. I've become even more convinced that that this is where the next domino is going to fall. You know, the crisis that we're going through at the moment, it started in America, mainly in California and New York. It started there. It moved to Europe. Supposedly America's recovered. I think for a lot of people on the street, it hasn't really changed. But for the wealthy, for the elite, for the banks, the system, things have improved. Anyways, then I went to Europe next. Saw all the problems in Spain, Italy, Portugal, the pigs, even in England, now France. Now it's moving on to Asia. What happened was, basically, I don't know if you know this, but countries like Thailand, Australia, China haven't really felt the economic crisis up until now. They're still living in an innocent sort of way compared to how us in America or Europe, we've already seen the beginning of the crisis. But now the eye of the storm is circling over top of Asia. And mainly the weaker Asian nations, Indonesia, Thailand, India. Japan is not feeling it, or in Korea not quite as much yet, but it's coming there as well. And it's kind of like a larger replay of the Asian crisis that hit. What happened was the hot money, all the money that the Fed was printing, went into the emerging markets. Not only Asia, also Latin America, but a lot of it went into Asia, into investments, into property, into factories. Now as the Fed is contemplating tapering back the QE, quantitative easing, that money, and as the American economy, in a sense, is recovering, that hot money is coming back. It's coming back. It's flowing back into the United States. And what's happening is the Asian interest rates are going higher. The currencies are depreciating. A lot of the loans aren't getting paid back. And we're on the precipice of another crisis, and it's going to start in Asia, I think. According to what I've been reading. Let me just read you some quotes from some of the articles I've been reading. After the global financial crisis, Asia grew at more than 6% each year, outperforming a troubled world. Not just China, moreover, but also India, ASEAN, and others. While the USA and Europe floundered, the gravity-defying feat substantiated the idea of Asia's rise to close the gap with developed economies. Everybody has been talking about, it's like a miracle in Asia, right? With China and everything like that, we've been relying on them. Now they're faltering. It's going to obviously pull down the rest of the world economy. As America's recovering, this is going to be what's going to really, bring us into the double dip again. Now gravity seems to be catching up with the Asians. Growth in China has slowed as the new leadership's policies to discipline credit and spending. Much needed reform to cut wasteful projects and secure the financial system. The government targets 7.5% growth. Still good, but a far cry from the days of double-digit rates. Indian expectations are even lower after visible missteps combined with a current account deficit around 5% of GDP. Spooked investors and capital outflows have led to the rupee tanking. Similar symptoms show in Indonesia with a current account deficit, shooting past 3.5% of GDP in the second quarter. In past weeks, the rupee has fallen below the psychological threshold of 10,000 to the US dollar, even as officials offer reassurance. So it's not just one country, it's region-wide. We're looking at, we're on the brink of a huge crisis. And I just keep watching Asia, that's all I have to say. Even my own wife keeps telling me that nothing's going to happen, everything's going to be fine. And I know it can be easy to believe that, but it's really coming. Triggers for the slowdown do differ from one country to another. Emerging signs, however, show macro conditions are changing and bringing Asian economies under new stresses. One thing that I saw here in Phuket in Thailand is that there's a lot of vacant real estate. Just huge condominiums or luxurious condominiums that are finished and they're just sitting there vacant. It's so reminiscent of the U.S. housing boom. I'd say it seems to be even more extreme over here, because here people don't sell. They won't sell at a loss. They feel like it's a loss of faith. They're willing to just hold on to vacant buildings forever. They just feel like it's money in the bank, but not when it's it's going to depreciate a lot. The key factor is American policy. The Federal Reserve is tightening its loose credit spigot. This is the right response for America with the U.S. economy looking up, but implications elsewhere bear watching. Okay, and then another article. This one centers around India. In a reprise of the 1997 to 98 Asian crisis, India's stock market is plunging. Bond yields are nudging 10%, and capital is flooding out of the country. India's financial woes are rapidly approaching the critical stage. The rupee has depreciated by 44% in the past 2 years and hit a record low against the U.S. dollar on Monday. The stock market is plunging. Bond yields are nudging 10%, and capital is flooding out of the country. In a sense, this is a classic case of deja vu, a revisiting of the Asian crisis of 1997-98 that acted as an unheeded warning sign of what was in store for the global economy a decade later. So at that point, they're saying that the Asian crisis was a premonition to the world financial crisis. So could this new crisis be a premonition of an even larger crisis that's going to hit the world again? I think so. They say history repeats itself. An emerging economy exhibiting strong growth attracts the attention of foreign investors. Inward investment comes in together with hot money flows that circumvent capital controls. Capital inflows push up the exchange rate, making imports cheaper and exports dearer. The trade deficit balloons, growth slows, deep-seated structural flaws become more prominent, and the hot money leaves. This, at the end, I find it quite interesting. It says, in stage 1, policymakers do nothing in the hope that the problem goes away. In stage 2, they cobble together some panic measures, normally involving half-baked capital controls and selling of dollars in an attempt to underpin their currencies. In stage 3, they either come up with a workable plan themselves or call in the IMF. India is on the cusp of stage 3. And it's not just India. It's also Latin America, Brazil and Mexico. So just keep watching YouTubers and keep your ear to the ground and watch the emerging economies. That's where the next crisis is going to begin. And it's already beginning. We're on the third stage, the precipice of the third stage.